I'm taking a risk producing this video because as I speak, the inflation numbers have not been released yet. But by the time you see this video, you are going to find that more than likely inflation is running hotter than it was last month, and likely by a wider margin. So what's going on with silver and gold? How will they react to this? We'll discuss all of it as we explore. Inflation as measured by Shadow Stats is around 14%. That's how they used to measure it before the Bureau of Labor Statistics chefs at the Cook the Books Club got their hands on the numbers and how they twist these numbers around. But even they cannot stop what is a reality, that the very fact that the dollar itself is losing value by probably around 3.4 to 3.6%. Just depends on who you believe in terms of the predictions. Of course, by the time you see this, you will have a known number, but likely it's going to be somewhere around there. I'm referencing a piece here by Gary Wagner that predicts what's going to be happening tomorrow based off of some market participants for their predictions for the Consumer Price Index report. According to economists polled by the Wall Street Journal, the report will reveal that headline inflation increased by 0.6% from July. If their predictions are correct, this would be the largest increase since June of 2022 and would take inflation from 3.2% in July to 3.6% for last month in August. Crazy. Now, the Federal Reserve is expected to leave its benchmark interest rate, which is the Fed funds rate, unchanged at next week's FOMC meeting. According to the watch tool, they're still showing it at 93%. But by the time you watch this video, those numbers very well may be different. With that being said, what does that mean? As the engines of the economy continue to move, well, they might be moving at a slower pace. We don't know, because if the Federal Reserve does raise rates, that's going to stifle the economy, and that could actually mean lower gold and especially silver prices. And in fact, that's what I predict is going to happen. Gold is already reacting. As of the recording of this video, gold is down somewhat. I think we could see further pressure on gold. Silver was an anomaly, but it ended up a little bit lower as well, too. But that's just it. It seems to be working in the opposite direction. As I mentioned in a prior video, if inflation rises, mark my words, gold and silver will fall. Likely by the time you are watching this video, that very well may be true. Or I may be eating my words. Now, why would I say that? Well, because things will continue the way they will until they don't, right? Sooner or later, natural market forces may start to shift a bit, and we start to see a focus, not from the strength of this, because even though it is the cleanest of the dirty shirts in the laundry pile, it's still dirty, and people want something clean, natural, and proven. That's exactly what gold and silver provide. I'm including silver in it because though it is seen mostly as an industrial metal, this metal does have a long-standing history as a monetary metal, even much more so than gold. Will people realize that? Will, quote, investors realize that? I don't know. But I think one thing is for sure, stackers that have began accumulating the metal, silver, specifically since the silver squeeze movement, a lot of them have learned a great deal during the course of that time. And that learning curve is taking place now where they're digesting information from a variety of different sources, weeding out the good information from the bad. And by the way, there are some analysts out there, including content creators on social media, such as this channel, who provide good information, who provide some incorrect information at times, who make valid predictions, or predictions that come true and other predictions that do not. Certainly, I've fallen in the category of someone who has provided bad predictions in the past, especially on silver. Although I've been right about the summer slump so far, the late summer slump for silver's price. But regardless, what is it going to take for these metals to really shine, to really stand out over the course of the next couple of months? I think it's going to be probably a lack of, it's going to take a paradigm shift for investors in the market. Most of those investors in the market, they don't stack the physical. They're going to be buying paper silver, exchange-traded products, ETPs, both in the silver and gold space. Those contain mining stocks, futures, options, and ETFs, exchange-traded funds. So they will get into the space there, while you and I, well, we'll continue to hold our precious metals, and if we can afford so, we will stack more of them as our budget allows. And I think that people are going to start to see the light in terms of what gold and silver provide. A stable store of value during times of economic uncertainty. We are living in times of economic uncertainty, and it has not manifested itself yet in terms of a market crash or in terms of a deep recession, although some think that we are in a recession of some sort right now. And, usually recessions aren't noted or until several months or quarters, because it's got to be 2 consecutive quarters of negative GDP growth. And until we get some of those other numbers out, we'll see how that plays out. Then we will see a recession. But the Federal Reserve, part of me feels that even though we may see those numbers shift a bit on the Fed Watch tool about the percentage, will it be 93%? Will they continue to think that they're going to go ahead and skip raising rates this month? I would not be surprised. I'm holding out some possibility that they may be brave and go ahead and raise rates another quarter point next week, especially if inflation goes up to 3.6%. That number's already out as you watch this video. But nonetheless, I think gold and silver are reacting in a negative direction, because that is going to leaning more people thinking that they're going to do that. Or if they do skip, then they're looking ahead to November's meeting, where they will likely do a quarter point rate hike. In fact, as I record this video, the Fed is predicting that there is a 59.3% probability that the Fed will stay the course in November, with a 38.1% probability of a quarter point rate hike. So those numbers are much closer. By the time you watch this video, they could be shifted greatly as the news trickles down and we see what's going on with inflation. Persistent inflation, even though we know in reality when you measure everything accurately based off of how they used to do it, is much higher than what they would tell you. It's really, in a sense, a crime that this is happening, which is why I've been using the phrase, the chefs at the Cook the Books Club, because they are acting in concert with the powers that be in the administrative state, and they want to survive above and beyond all else. So they will shift and twist those numbers to make everything line up with their narrative, or to soften the blow of a declining economic situation out there. We'll see how unemployment numbers go. I was having a conversation with somebody in the comments one time. It may have been on a live stream where somebody had mentioned, that the Federal Reserve, they don't care about people's jobs, and yes, there is some truth to that. What happens? They create the problem, the very problem that they are trying to fix. They create the problem by printing money ad nauseum and then tightening in such a way that they raise interest rates to pull in that money supply so that we can't get as much of it, and it stifles employment, stifles economic activity, and so we may have inflation, we may have disinflation at some level, but at the cost of jobs and employment. And which would you rather have? High inflation with wages that don't fully keep up with inflation, but at least are rising, or that just have money at all in your account on a bi-weekly or every week whenever you get your paycheck, or no job and low interest rates and no inflation. I think we would take the jobs, would we not? Yes, indeed. We got to make some money, and many of us are working more than one or two jobs. And how would they count those? It's that's another thing that we must think about too. There are 6 measures of unemployment, the U1 through the U6, and the U6 is the most telling number on where the employment situation is. But regardless, we will see what gold and silver does as inflation continues to persist. Now, I very well may have egg on my face if by some miracle we see disinflation tomorrow. In other words, we see it fall back to 3% or 3.1%. I highly doubt it, but just in case that does happen, I think we might see the metal start to pull up a little bit. Not by much, but they very well could. But regardless, I think that's a low probability. Likely we are going to have higher inflation tomorrow, persistent. And that's going to mean a whole lot of things for a whole lot of people. And it's going to mean a whole lot for the markets, including the precious metals space. So we'll continue to press on, and I want to encourage you to stack on no matter what gold and silver does. The prices may fall, but remember, price does not equate to value. And you and I, as we hold these metals, we understand their value because all price is just a number that is equated by the marketplace in general. And we know it's important if we need to sell or buy the metals, but when we hold them for the long term, in a sense, because of that long-term span of time, any metals that you bought some time ago, no matter the price, whether it was an all-time high of around $50 silver or $2,069 gold, $50 silver or $2,069 gold, to now, you don't lose until you sell. Or if it was $300 gold and $8 silver, well, you've got something of value in your hand. And press on until you need to sell or you sell at your own leisure. So I hope you found this video informative, insightful, and encouraging, and I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe!